My name's Abbie Llewellyn-Waters and I work at Jupiter Asset Management. I have been investing in this space for over 13 years as an active global equities fund manager. My current role is fund manager of the Jupiter Global Sustainable Equities Fund, which has an objective to invest in high quality companies that are leading the transition to a more sustainable economy in economic, environmental and social terms. We wanted to support the Pensions for Purpose event this year because we felt that we're very much at an inflection point in the industry as we seek to broaden our definition of fiduciary duty. Karen Shackleton and her team are delivering a very important platform to enable a broader understanding of that fiduciary duty. I think that what made it stand out from other events is the point in the cycle where we are, where we now have a much broader platform, that pension funds are beginning to understand that the potential for their role in a transitioning economy. And when we talk about that broadening of role, we're really talking about that broadening of definition of fiduciary duty, being environmental, social and economic. We feel that impact is very important on the basis that if you want to achieve the most attractive risk-adjusted returns, then you have to consider a company's profile in its whole. So what do we mean by that? If a company employs people and has operations, it has an environmental and social footprint. And that impact provides us with a huge insight into the quality of a company and what it means in terms of long-term attractive returns. So I think the global themes currently, if we were to take the top three, for instance, one of the largest and most significant is what we call climate change. But actually, if we refer to it in the terms that the vast majority of the incoming member base of pension funds are referring to, it's a climate emergency. And identifying companies who understand the risks to their business on a future basis in the context of a transitioning economy. So we need to decarbonise. And those companies who have understood that and have invested in their businesses to mitigate that risk on a future basis are significantly more attractive to us from an investment perspective. If we think about it in those terms, one of the interesting dynamics, certainly from our perspective, is that we found ourselves with a portfolio with a 92% lower carbon footprint than the index. And that told us that these companies are really seeking to not only mitigate risk to their business in the future, but it also provides us with an opportunity to identify those better run companies with longer term management teams who are thinking about the future of success of their business. Another example we could give is in financial inclusion. It's a really interesting theme at the moment. We look at financial inclusion on the basis of socio-economic empowerment to lower income groups that historically perhaps would not have had the same access to financial products. We also look at it in the context of female participation in the global economy. The reason we like that is that these kinds of companies who provide digital payments or specific financial services that have a product or service designed at those previously unbankable cohorts, we like them because we think they're structurally supported, because ultimately they deliver a more inclusive society. And from an impact investing perspective, we think that's a very attractive position. I think one of the third global themes that we would spend a lot of time looking at the moment is around leverage. If we look at debt, how much debt is in the system compared to a decade ago, we're about a 60% higher point. That's pre-financial crisis levels. So if we think about that, the economic sustainability of companies in order to deliver their measurable positive environmental and social impact is a really important starting point, particularly as a window to understanding the discipline and the resilience and the rigour with which management teams manage their capital structure through a cycle. That's a really important area for us. What I would also say is while we have these structural themes that the market should be thinking about at the moment, we also have an underlay of really meaningful and important insights if we look at ESG data considerations to drive that enhancement of our analysis of understanding companies from a financial, environmental and social perspective. And some of the most important considerations would be things like, how do these companies treat their workforce? How do they deliver a more sustainable economy in terms of wealth inequality? And that plays a huge part in understanding the broader impact companies have at a cultural, operational and product level. I think impact investing is particularly attractive to pension funds because the primary thesis is that higher quality companies who manage their businesses in the context of financial, environmental and social impact will deliver attractive, sustainable returns over the long term. More specifically, when we think about where we are from a benefit perspective, we've been in an age of information and transparency. Our incoming saver base, the members who you're trying to attract, are really at a point where they're set to inherit or set to grow their percentage of global gross income threefold in the next decade. That becomes a meaningful wall of money, and this incoming saver base expects and wants both transparency and impact from their capital. They will want to understand how many jobs have been created, how many litres of water have been cleaned, what's their money being spent on a relativity carbon basis to the main market, how many patients have been helped by the capital that's been invested on their behalf. They will want to understand all of these factors, and I think for the pension funds, this is a fantastic opportunity for engagement and participation, particularly around the transparency of impact point. Being able to demonstrate to the incoming investor base where their money is being allocated is an exciting opportunity for them to get greater engagement with their member base. And I think that's a great opportunity. And the point that it will be expected of these schemes is very important. I think it's very important step to take with impact investing because I think it's the future of investing. I think when we think about long-term risk-adjusted returns, taking into consideration the financial, environmental and social impact of these companies will be intrinsic and the default option for many of the pension funds on a forward basis. The more deeply this point is understood, the faster we will see adoption and the greater the amplification of impact to the global economy.